All right, so a little review for today. I didn't really look at it much today. No stream. I didn't take any trades either. So we'll do a little tiny market review, and then this one is more dedicated for psychology. So if you got any problems in terms of psychology has been holding you back, or you just want something to share, and you're willing to put that in the chat, feel free to put it there, and we can go over through those questions or issues that you may have to, as well as helping others. But we'll look at obviously a little review for today, and then my expectations going into tomorrow and the rest of the week. But for today, we have pre-C, going through all of them, pre-FOMC. FOMC is obviously one of those tier 1 news drivers, so you got to be careful, of course, on the day of, but the days before they can normally be pretty tricky if you don't know what you're looking for. It's something that definitely comes with experience, but we had a large range move yesterday in terms of, it's obviously not a huge expansion range, but in terms of for a Monday pre-FOMC, that's relatively large. So if you have that kind of move going into pre-FOMC conditions, even if there's 8:30 news, that's going to be one of those days where it's either extremely good, or if it doesn't look reasonable, then I'm going to skip it basically with no remorse. And that's the conditions that I saw today. There was still a trade opportunity that I thought was decent, and we'll review that, but I chose to sit out today after yesterday's win, and I just manage some of my own mental capital for the rest of this week. Although it's not crazy, I want to have the best opportunity if on Friday there's something that I can capture that. By the way, if you're just now joining, this is a psychology heavy market review. So if you got anything you want to share, put that in the chat. So obviously we had this large displacement yesterday over the previous week high and the swing high from Thursday, not previous week high, previous daily high, and the swing high here. A nice displacement with SMT at the bottom and a shift through this order block or through this shift on the market structure shift. Both to me indicate price is willing to go for these highs, and obviously the all-time highs up there. So coming into a daily today, if I were to look at it, an efficiency here with the bullish order block, dropping into that, going into the session, as long as we were holding that order block and having some reaction away, I would believe that we were bullish, at least for the previous daily high. I think that's reasonable if you can look at the daily chart and the weekly chart, but even look at the daily chart, nice healthy candle bullish. The most obvious draw to be going for is the swing high right here. So even on a higher time frame, weekly, daily, 4 hour, whatever you want to use, I think all three of those are pointing to bullish prices going into the session. And that's what I would frame if I was doing this kind of market review to look for a trade opportunity that I may have missed. This is the kind of reasoning that I go through. This is what's called perfect hindsight. If you haven't heard me say it before, this is what you want to be doing, is looking at what was the correct bias for the session and then the logic behind why that bias would be correct. So very simple, almost 2022 model with a stop run on the bottom with SMT, shift with a gap, trade into the gap. Where would you expect it to go? That swing high. So if we're looking at it, bullish price action expected for Tuesday. Now, as we go into the 1 hour chart, it gets a little bit more messy. You've got the midnight opening price here. We're dropping back and holding this reclaimed gap, which is an hourly imbalance. Pair with the bullish order block, drops into a here, here, here. So all respecting that, you'd favor if there's something like SMT at the bottom here, which there is between YM. So you have SMT at the bottom here. And then you're looking for why potentially that would be the low of the day. I came into it, if you look at the 15-minute chart and the 1 hour chart, I can argue both sides. Reason being, of course, we would like to look for longs, but low resistance buy side here paired with this swing high, and then you've got low resistance sell side here paired with this swing low. So to me, coming into a session like this, obviously with the gap here, I'm still bullish probably for the week, but entering into that kind of 50-50, this is to me, this is the true definition of 50-50. Sometimes like yesterday, one could argue it's 50-50, meaning you could argue for longs and shorts. I think yesterday was a lot better looking for longs. At least I could frame it better. A day like today, almost textbook 50-50 for me inside of kind of this recent dealing range, 50% inefficiencies on both sides of the market using a reclaimed gap here with low resistance buy side and sell side on either side of the chart. I can, if I were to come into this day and trade it, if it were to go down, I can see why it would go down. If it were to go up, I can see why it would go up. That to me is not something that I want to be trading, because not for the fact that I can't trade it. Obviously, we'll look at this, the example that was present today, but the fact that there's not going to be a line of the sand that's clear enough for me to flip bias. And for a lot of new people, that's not going to make sense. But if you're experienced or intermediate, this is a very, very important thing that is crucial in understanding when to sit out and when not to sit out, right? So if you're going to take notes, this is the part of the video that you want to take notes on. On any given high probability or medium probability day, even on specific low probability days, you have, at least for me, I have not always a here, if it does this, I'm going to flip bias, but a feel, right? There's almost this intuition, this feel of, okay, sure, if it's crossing this many PD arrays, I don't have to articulate exactly this many PD arrays, but more of just, okay, if it's not doing the things it's supposed to be doing for a bullish bias, for example, I will be able to determine that hopefully earlier into the session, right? Like preferably during opening range or slightly after opening range. On these kind of days, like these extreme, difficult 50-50 days, at least for me, there's not going to be that line in the sand where, I'll give you an example. If the 930 Judah swing, let's quote unquote Judah swing, was to go in a single direction, I cannot determine if that's going to be manipulation or expansion. I'm going to have to wait to see, is that reaction something that's indicative of a manipulation or an expansion? Okay, it goes towards the draw and then it reverses a little bit. Now I need to see, not only is that the actual manipulation, but is there a confirmation that's manipulation? So I need to see it trade into a gap and then expand away. But during the opening range, as we know, that could, and anywhere within that could be manipulation. So it could go double Judah swing. It could go one way and then expand. 930 could just expand. And I would never know what the true direction of price is only until later in the session. And when it's later in the session, I have less of a range to trade in terms of time and price. And the entry models are going to be higher risk in association with that, because they're going to be higher up entries in the market maker model, where we have to account for things like high resistance moves or deep retracements, things that don't give us good RR. I'm talking 2+. Two may be the best, but it's not going to be greater than that. You saw me trade those kind of conditions. It was either on Friday or Thursday, the live, I think it was Friday, shorting it basically against the move. And that it's a very hard day to trade because we're inside of this large inefficiency, et cetera, et cetera. I went over that on stream, but I'm only going to get a scalp out of it. And if it's not clear enough, this reasoning to me, you kind of have a little bit more line in the sand. You've got a gap it's trading into. You can see other stuff where it's going to be easier to get, okay, oh, that's the true direction of the session. On this kind of day, I normally won't have a good reference point to even intuitively look for that. And it'll be very late in the move that I'll be able to say with confidence, this is what I think is likely to do, and I can now take a trade. Yep, this is all going to be recorded. So for those who are intermediate and advanced, that is the more, and even if you're a beginner, to understand that that's at least for me, the reasoning as to why I choose not to trade these days, I think it gives you more confidence in knowing it's not just because you can't trade the day, but it's because you're more likely to read it wrong and you're more likely to lose on this kind of price action, at least for me, than I were to win. And if I know that the probabilities are already dropping below 50%, I have a better chance flipping heads or tails than just shooting long or short off that. So that is the main reason, because it's very, very hard to flip bias or get any directional move until after reading the 1 minute chart without a bias in the first place. So a lot of mental capital is going to be spent in the early part of the session, where then later on in the session, it's going to be a scalp. And I've already got low mental capital on the scalp, where then that kind of mental condition is also sometimes a fine line to walk through. All right, so enough of that, but that's the psychology bit for kind of why I want to avoid a day like today. The reasoning that I'm waking up, I'm looking at my phone, I'm looking at this stuff, and I can say, okay, it's likely I don't want to be sitting in this. That's the reason why. But we're using this reclaimed gap here. We got SMT at the bottom, and then it starts to no displacement really on the 1 hour chart, 15-minute chart. Same exact thing. Very weak displacement through up through here, and then it drops back down. And on this chart here, without the 15 minutes, if I turn off these sessions, this is what I saw in the morning coming into 9 a.m. here. I have no business trying to trade any of this. Given is especially what I said before. And then if I come to the session, I see this on the 15, there's not going to be a trade I can take at 9:30 or 9:50 with extreme high conviction unless it's blatantly obvious to me. And me banking on being blatantly obvious, if you've seen for the past 4 weeks what's been going on, that's a tough gamble to take. So that's where I said, basically at 9 a.m. looked at it, just like, yeah, I'm not going to touch it. As we re-annotate today of actually what happened, this is important, still important to do, because you gain experience and you gain confidence in your model, and it's showing up even on these low probability days. But you've got SMT at the low, displacing out over a short-term high with a gap. This gap is being traded into. You have in here, I'm going to keep this actually. This is a down closing candle range consecutively with a volume imbalance in the middle. When you have advanced tip as well, volume imbalance is present within a order block range. You want to go to where the volume balance is paired with that order block. So instead of using the upper portion here as you normally would use, you go down to the volume balance and the order block here, and you want to use this candle. This is not contrived. This is not cherry picked. This is something that goes on even on lower time frame charts on the 1 minute chart that you'll see. And if you're able to spot this kind of thing, you get further precision on the entry. Instead of going to the gap, you go to the gap plus the order block, and it won't be here. It'll be here or here. All right. And that's an advanced tip that I suggest most people who are studying order blocks, you do not have to worry about that. But either way, discount dealing range here. This goes into your discount PD rate for the 15-minute chart, as well as this down closing order block. And then you've got the London high, as well as the 1 hour gap up here as targets on price. But if we're coming from an inefficiency down here or down here, this is IRL, this is IRL, where are we going to go to? ERL and premium. And you've got this dealing range here to here. That's an ERL and premium on the left side of the chart, and that's time-based. So as it's dropping into it, obviously the overshoot there on the 15-minute chart. As we go to the 5-minute chart, let's go back over here. Monday, Tuesday. Same exact thing I was annotating. Minute gap or 15-minute chart with the order block here. Let's go back to the 5-minute. And then here is 9:30. And this is exactly the type of thing that is going to throw you off on these kind of days. Like I said before, with these kind of days, meaning I can't have a strict bias. It's very hard to find a good bias or even find any data as to why it could be either side. The data, if you ever see me trade, or if you've been in the private group before, if you've watched my videos, if I ever say, okay, I don't really have a hard bias today, I have a soft bias, I'll come in, I wait for opening range. I'll let the opening range play out, or sometimes even the first 15, 20 minutes, and I'll know, okay, what the bias is going to be based on the signatures I'm seeing going into the open. This is exactly the kind of thing I'm not going to be able to do on a day like today, where if you look at the 5-minute, displacement on 930 towards someone's suspected draw, right? If you're bullish, this expansion up, you're going to want to get in either at 930 or the gap. You're going to get stopped out. If you're bullish and you see this move will run above the stops and then a drop down here with a displacement through this SD, what are you then going to do? You're going to flip bias. Then it starts to trade back up again. And then it starts to re-in here. And you're like, oh, now I can flip bullish. You already flipped twice. It's already bad. Right? You don't want to be, for me, my personal rule, I don't want to be flipping bias more than one time. If I have a good bias, I should stick to it. If there's reasons as to why I could flip, boom, I could flip one time. I'm not going to go back to my bias because then I clearly do not know what's going on. And the trade I'm about to take is going to be stupid. I'm not saying it's going to be a winner or a loser, but it's not going to be the kind of trade that's building good habits because it's a low conviction trade. Where if I were to take the trade and I were to win, it's more based on the luck of me flipping than it is of me actually taking a good trade and knowing where price action was going to go. And same exact thing. If you were bearish and you saw this move up, then maybe you're going to be anticipating this as a Judah swing and then drop down. You're going to losing trading there. And this is those kind of double Judah swings. Even if you have 830 news, don't even look at the fact you have 830 news. Just look at the price action from 930 onwards. Sure, the stuff is still there. It's still going to be there, but it's much harder to trade. If you look at the 1 minute, you'll even see it even more, right? Obviously, coming into this, if this is a very easy way to look at price action, but when you see this kind of barcoding chop, where there's a lot of wicks and VIs, and it's just staying back and forth on normally on ES, right? I'll show you ES right now. ES, it'll be worse. It'll be even more looking like a scanned barcode. Let's go to ES. Let's look at the pre-market. Like in here, look at the wicks and like the candle. It's just printing. There's nothing in this that looks algorithmic, right? This just look at this. And ES, when I used to trade ES, this was a very telltale sign of me skipping the day. But now it's a little bit more common where you can't just use that alone. But look in here, 930 runs up, fails to take the London high, then it drops back down, forms this kind of double Judah swing. Where it comes back down, tags that bullish order block, and now you have expansion away, and then macro time is offering you these buys in here, which if you're looking for longs today, this is the one that I'd be studying right in here. Your value gap plus a bullish order block within discount of the dealing range of this relative child dealing range. This entire thing is a bullish order block, right? Dropping into that, and then another spike up, taking that high, dropping back down into the reclaimed gap here. There's probably also a first presentation gap that could be going on. Like this technically, so you can be marking this out as your first presentation, that's fine. But notice how to the left of it, you have this balanced price range. So I actually like this more as your first presentation gap. I would hope that ICT would also agree with me on there, but based on his rules of what he marks out as a FBFEG, this looks like the best candidate for one. Let me zoom in here if you're on your mobile. So this gap is at 930. This one here is with next to a balanced price range. So that makes this more of a breakaway gap. So you don't want to use that as an inefficiency. This is a little bit more inefficient as it's leaving now this range in here. This is a first presentation gap. So this is your first presentation sibi. This would be your first presentation bisi. But either way, gap, reused there. You could either be using this blue one or this one, doesn't matter. They're both inefficient. And then eventually it just kind of just prints up, takes out the buy side. What time is this high put in at? Right here at 11 or 10:16. For anyone who knows the session stuff that we look for, that typically is placed outside of the time range. I'm going to acknowledge this, but this high being placed outside the time range is not something you want to be trading for. I've been burned too many times trading low probability days of the lows and the highs being put in at the wrong time, where it's not something you can rely on as heavily when you have good price action. So sure, it is running out later here at 11:14, which normally you can see in here, it breaks the 9:30 to 10 low and then 10:30 to 11 forming the high. It's supposed to be formed right here. It takes a little bit of time and it comes back, consolidates, and then it goes for it during the last ditch macro. But this is not something I'd be like, yeah, this is a good trade to study. More of this range. This is all you really want to be studying in here. That's the good move, I think. And then also notice, obviously, the entry model is still there, but this is tough. A double Judas swing is one of those things in 2024 that I chose to avoid for good reason, because a lot of times it's one of those things that's going to throw you off if you have a hard bias and you're going to take a loss immediately off of it, or you have to be very patient in knowing what you're looking for and then get a late move. And a lot of times those late moves are going to be, like I said, lower risk unless you have a crazy good entry model. Higher risk unless you have a good entry model, and they're going to be further up the range where now you're trading longs in premium and shorts in discount, which is going to be psychologically harder to do as well. So this is the real move I would be saying to study. And if you were to go back and mark this up, that's what I would mark up from higher to low, higher time to lower time frame. But this is a prime example of psychologically how it's going to play with you, and how I know we're ICT traders and we have algorithmic precision and whatnot, but human nature is human nature. So the reason that this market is so good is it literally just plays with your, it doesn't do it purposefully, but we all have human nature in some sense, and you need to figure out what works for you and what doesn't work for you. And there's two ways you can do that. Either you learn it from someone else, whether that's me or for someone else, it doesn't matter, or you have to physically experience it and then adapt and change the ways as you see fit. So I have my approach. I have the things that I like to do based on experience of my own wrongdoing sometimes, in losing trades where I've developed parameters for myself to trade in and not trade within, where if I choose not to take a trade and I sit out, I am comfortable in doing that. The problem is when we say, oh, I could have sat out today, whether you take a win or a lose, or even when you do sit out, if you don't understand the reason and you don't understand why you're sitting out in the first place, temptation is going to be very enticing. Where you sit out for a little bit of time and then you see a potential trade or you see someone else take a trade, you're like, oh yeah, that makes sense. And you hop right on. You follow the follower. So understanding that, number one, it normally stems from the feeling that you're not good enough. At least for men, that's typically the problem is you want to, kind of square up the problem and attack it straight on, which is just to trade it, just to prove like, okay, yeah, that thing is beneath me. That's not the way to do it. The way to do it, at least for me, is to, number one, identify the fact that I can trade the day. So going in and doing something like this and seeing the same exact model print there every day gives me the confidence to know I know how to trade it. I know how to trade a swing to Z day. I know how to trade different days. This is just one that's going to be hard to me. So if I know I can trade it, if I really had to, but I choose not to because there's going to be other days in the week that are better for me, that's the habit I want to be building, because it's going to be hard. Because trading is one of those things where the frequency of trades is very low, because you're going to be taking trades more sporadically, right? That's a hard thing to do. Is a lot for a lot of people, where that's that Psych guy Randy was talking about it, where the work in trading is patience. The work in trading is patience. The work is not taking trades. The work is waiting for the setup, and that is a lot of work. It's a lot of work to stay patient and not do anything, when in this world we're programmed to, the more work you do, the more you get paid. It's almost the complete opposite in trading, which is very weird, because it feels like you're not going to do anything and you feel like you're out of control, when in reality um, you're just a panther in the trees. You know you have the skill, you know you have the speed, you know you have the brains. You just got to sit in the tree. And when the unknowing gazelle walks by, you know you can best it. It has no attack against you, but you just need to wait enough for when that perfect one is lining up that you know you can get that kill. And if you didn't get the kill, you know, okay, that was one of those things where I got to go get that. Why would I not take that? That's what you want to be focusing on when you have the model. In terms of post-day markup, would you recommend marking up and studying the PM session if I only intend to trade the AM session? I say it's not really worth doing the entire day. What I would normally do is I would mark up intensively the AM session, and if it carried on into the PM session, I would mark that up. But if it had almost no relevancy or it reversed the AM range, that was not something that was super important to me. Because for me, I want to see what's going on pre-market, what's going on during the session, what's going on maybe during lunch. I don't need to normally see what's going on after 1 o'clock, unless of course it's expanding the AM range, and then I can say, okay, is there a reason I could be holding a trade for this long? If there's not, then I don't mark it up. If there is, then I'll start to mark up some important things that will show me why I could be holding for that long, right? Otherwise, to be blunt, I think it's honestly just a waste of time to study something else that's not going to be applicable to your model. So sure, it's great to understand what's going on there, but if you choose not to trade it and you don't even think it's necessary, then I think it is loading your brain up with stuff that's not going to be as helpful, that is intensively studying what you need to be studying. Went from being small red to 3K loss. How do you come back and start fresh? Do you take days, weeks off to recoup? I would say that's a good idea. Time definitely heals a lot in trading. It's if you feel like you are obviously in an area where you don't really know what's going on. I sent you a DM, by the way, if you want to read that when you get the chance. It'll summarize some things. But if you feel like, okay, I really, if you really look at yourself, you're like, yeah, I don't really know what's going on. I feel like I'm kind of stuck in no man's land. And you've got a lot of problems in terms of both technically and psychologically. My suggestion to you would be to just take 2 to 4 weeks off. And in that 2 to 4 weeks off, I'm not saying take a break of trading. I'm saying take 2 to 4 weeks off and really fix the problems. A lot of the problems come from, if you're new, a lack of knowledge and a lack of self-confidence, both of which can be fixed immediately through a good process of actually learning. When you learn properly, it fills a lot of those gaps, and when you go to sleep every night, you feel like you leveled up. That's the most important thing. It doesn't matter how much money you made, how much evals you passed. If you don't feel like you've leveled up in some sense when the time you go to sleep, it's going to feel like that day was either a waste or there's something that just didn't go right. So my suggestion to you would be get a bias, record it in some sense, write it down. Write down why your bias is this way. Tape read the AM session. Don't take any prop trades. Don't take any demo trades. Don't even put this little thing on the screen. Don't do that. Simply just watch it. You can annotate things. You can annotate there's a gap here. It trades into the gap and offers a trade. That's fine. Study how far it goes. Study to what thing it goes to. Study where the entry is happening. You do that for 2 to 4 weeks. And then also after every day is finished, you go back in, you delete everything off your chart, you go back to the higher time frame, and you work top down, like you see me do in these live streams. This is, to me, this is not only for you. It's also a way for me to go back in the day and study to see what happened. I don't screenshot them all the time. I've been blessed with pretty good memory that's been holding up so far. So normally I'm able to memorize days of the week just by studying them once. But I didn't have that skill before. It's just not like I have photographic memory or anything. It's simply just because I've been doing it for about a year, where now, okay, I can memorize weeks of price action. Normally the past 3 weeks, I can see the day and talk about it. What I would say is go back in after the day is finished. Whenever you got time, delete everything off your chart and do this. Higher time frame to lower time frame, not of what you did, but of what the market did. See what the bias should have been. See what the trade should have been. And now you're replacing your memory of the bias and what the day should have been with the actual real data. And now your brain remembers that as what's called pseudo memory, basically fake memory that your brain believes to be true and really experienced. And it'll remember that occasion and almost correct it automatically. If you think that's not true, it is true, because you could watch a movie and somehow you're emotionally stimulated because you feel like that experience of what they're going through. So your brain is very good on picking up on things, but you have to feed it properly. So number one is just to look at it as, honestly, it's just tuition to your better understanding. And at some point you'll be taking your stop loss will be 3K, right? Your stop loss is going to be 3K, and on that trade you're going to make 9K. That's just the honesty of it. Is that those losses are going to be minuscule compared to the things that you're going to be able to do. And it's just a payment towards that future. But it's only a payment for that future when you actually learn from it. Otherwise, it's just wasted cash. So I would say take 2 to 4 weeks off, study it. Don't go into Twitter, don't go into YouTube and study something that you think you're missing. That's not what I'm saying. I'm saying study the things that you are seeing in the charts, and a lot of times that'll fill the gaps in your own learning, where then you're able to even absorb new content. If you're trying to stack new content on new content on new content, and the base of the pyramid is paper mache, it's not going to hold up the very intensive things, right? If I teach you how to turtle soup, if I teach you look for this on a low probability day, the framework is going to be terrible, where that's not going to build on anything, and then it's just going to be a collapsing pyramid. So focus, if this applies to anyone, by the way, focus on what you're doing now. Zidane Mutlu said this, but focus on what you're doing now. Maybe a Marcus Aurelius, I don't even know. Just do it better. So take a better bias, get a better write-up, get more sleep, drink more water. Just do everything that you're doing now better for 2 to 4 weeks. And by the time you do that, you'll have more confidence in yourself. It's going to be more than what you had, so don't get overconfident. But then that way, when you go in and learn, you're like, yeah, I can take this. Yeah, exactly. So that way, yeah, you are a professional mental athlete. And I will continue to emphasize that. We may not be professional athletes. We may not have, the wingspan of whatever, but 90% of people can't do this and won't do it. And that's solely because of their mental space. So we are becoming the top 10% or the top 1% of mental performers, able to basically give ourselves the amount of money that we dictate. You need to be treating yourself like a mental athlete. If you don't treat yourself like an athlete, you're not going to see the results that you want. So sleep is very important. Taking care of your body is very important. Take care of your mental is very important. Diligently studying and putting the work in, all of that stuff needs to be done, where then you're going to get the result that you want. Hope that makes sense. I don't know if I asked this, but when you went from break even to profitable, was it just a lot of taking away the little dumb losses, or what did you do to get to the next stage? I think it was definitely separating and removing some of those losses, which you're not going to be able to do all of them, of course. But I think it was both separating myself from the bad losses and learning how I can extend my winning trades. So I would focus more on how can I hold this trade longer in conviction? Like, does it make sense for me to hold the trade longer? So instead of going from a 1 to 2, I could even push some of those winning trades to 1 to 3 or 1 to 4 if it offered it to me. That was definitely beneficial in the mental aspect of things, because then even when you take a loss, having a higher RR, even not drastically, but just tiny, definitely helps. So you're like, okay, I can do that. But I think it was going from break even to profitable is simply just a psychology thing most of the time, where you're just removing the losses and extending the wins, and you're taking less trades. You're focusing majority on just boosting yourself, just stopping the bleeding, stopping the bleeding and boosting the wins as much as you can. There's also technical things you can do, like I said, of just refining stop losses. Even can do that. That definitely helps as well. But it comes with time. I don't think there's anything really that you can say this is how you get out of break even. It simply just comes with time and doing it and continuously adapting. That's the major thing, is when you get to break even, you feel like you're there, but you're really not. And we stop learning and stop adapting. Make sure you're just constantly pushing that growth. And it doesn't need to be new concepts. Like I said, it could just be in simply what you're doing now, just improving on that. Of course, Dipsy, no problem. I'm having trouble getting stopped out, even though my bias was good and overall higher time frame analysis is right. It's because I catch my entries a little bit late and end up taking higher risk trades. My stops have to run tighter as a result. On the top of trade risk, how would you recommend refining stop loss placement and how do you get about it? Sure. So number one, getting trouble stopped out, even though it's my bias is right and overall higher time frame analysis is right. Entering late is normally a byproduct of number one, indecision, and number two of indecision comes from low confidence, but both a combination of indecision and of the fear of losing. Basically, my interpretation of it is we know where the market's going. We know how to, we may have a very somewhat of a framework of an entry model. We've not studied the entry model too much where we get the confidence we need. So then when the model is there, we want to see it go a little bit. Then we want to see that's the indecision. And then we end up taking the next fair value gap trade. But we don't know that trade kind of model. And then we end up putting our stop loss wider or too tight. And then the trade gets choked out before you even can go to take profit, even if the bias is right. So for number one, decision making and being confident in the decision, having confidence in the decision and not being indecisive comes from studying the model. So you may know, yeah, it's an entry. You may know, okay, it's a gap and discount, blah, blah, blah. You may know you have it listed out, but you don't really know the intricacies of this model, right? What it looks like on a 1 minute time frame, what the variations are, right? Because every model is not going to be the same. It is in some light, but the actual price action is going to be different every time. So getting the confidence in that is going to be beneficial. Where then if you do have a higher time frame bias that's right, and analysis that's correct, and you see that 1 minute entry, you know with high conviction, that's the way I get in. There's no time after that. There's no time before it. That's the thing I want to get in on. And you're convicted in it. That way, if you lose, if you win, it's just, it doesn't really matter as much as taking a trade later. When you take a trade later, it definitely is, a lot of it is out of fear of losing. And the thing about fear of losing is we then fear learning. It's a direct pairing together, where if you hate losing, the honest truth is you hate learning, because if you lose and you take that loss as some way to build your model as a better framework of either taking a better trade or not taking the trade at all, there's nothing to be worried about. If we're managing our risk, boom, that loss is just payment for a better model. The cost of doing business. So confidence is going to be the number one thing. So you have two options of doing that I would suggest is either doing this, going back in and every single day, even the days you don't take a trade, marking up the model. Or number two is just to simply watch it for 1 to 2 weeks, watch the model play out, don't take any trades on it, but just say, okay, this is my model. Let me mark that out right here. See how far it goes. Does it give you a win? Does it give you a loss? More importantly than that, does it give you a good trade? If that's what it is, and you say yes, then stick with that model, and hopefully you get the confidence then to use it. If you don't feel confident in it, then you may have to switch models, and there's no problem in that either. I suggest it's just entry models are not everything. You need to have bias. You need to have higher time frame analysis, and that comes from doing it over and over and over again. Number two, topic of trade mismanagement. How would you recommend refining stop loss placement, and how do you go about it? So stop loss placement, I think the way that I go about it, if I were to trade a new model, get the number one, get the algorithmic, right? So if you let's go to a 1 minute chart here. Let me just pull up the charts. Get the algorithmic reasoning a good stop loss. So if I'm going to trade a gap, for example, if I'm trading this gap, the rule for me is I need to place my stop loss normally. Say this is just a regular entry. I'm not going to say it's some sort of fancy entry, but just say this is just a regular, I got my limit on the gap. My stop loss needs to be below the order block that supports the inefficiency. That's either going to be a breaker or that's going to be a gap. There's going to be other times they place it below the gap or blah, blah, blah. I'm not covering that for this. I'm talking about get a good stop loss that is algorithmic, meaning there's some sort of an invalidation of that structure or order flow that says, yeah, this trade is no longer valid. Order flow, order block should be holding. Swing lows should be holding. So if I were to get in here and I place my stop loss here, for it to come back down and pass mean threshold of the order block and tag the low, number one is probably going to go for that low, but number two, the order flow is not strong enough for me to get in a trade. So, and if you're trading IFVGs or something, you say you're trading this IFVG, then maybe your algorithmic reason is, okay, I'm going to place it at the IFVG low right here. Well, I don't know what it is for you, but figure that out and make sure that, okay, if this is my stop loss, it is completely a point of invalidation. The problem is when you have a stop loss and it's not a point of invalidation, you put your stop loss here, that counts for an encroachment, and you put your limit here, and you get tripped in and you get tripped out. But the trade is it's still a valid trade. You just mismanaged the stop loss. So then now are you faced with, do you get in again? Or do you sit out and watch it go to your take profit? Both of which are going to be probably painful decisions to make. So find a point of invalidation. And then as the trade is going on, find where you can trim it. So if I say, okay, I can go from here, and then, okay, it doesn't even touch this low end, then I see that I can maybe trim to here. Then I can maybe trim to here, and then to here, and then to here. That's for trimming your stop loss. Now, the way you refine it is then you see with a great deal of trades, maybe you have a sample size of 10 or 20 trades, see where a stop loss refinement or a quick trim could be used in that scenario and works for most of those trades. And then now instead of placing your stop loss here, you get in here, or you place it there. I mean, a little bit tighter. And anytime you're dealing with stop loss refining, you have to, it's going to cost you something. It's going to simply cost you something. It's going to cost you losing trades that are winning and getting stopped out prematurely. That is just the cost of refining your stop loss. You want a better model, you want to make more money, you're going to have to pay something, which in this case is getting stopped out on good trades. So you get stopped out for a little bit of them, but then you learn to either refine it better or that's just a part of your model now. So a lot of the times if you're refining it too much, it's because your position size is too high and you can't accept risk. The simple way of looking at that is either you trim your stop to break even really quickly, or when you get in, you're placing your stop loss in a random spot that's not a point of invalidation just because the monetary amount is too high to place it in a good spot. I mean, if you place it down here, it's like double your risk you want to put it at, so then you place it here for no apparent reason other than the fact that the dollar amount tells you that's what you should be doing. So lower your contract size, get a good spot that's invalidation. Then as you learn more about your model, you'll find better and better spots of invalidation. And you'll also be able to use different techniques based on the order flow. If I feel like a certain gap is going to be used as breakaway, sometimes I'll put my stop at the low of the breakaway. Sometimes I'll put it at the swing lows. Sometimes I'll put it at mean threshold of the order block or below the order block. And that's all based off of the variance that I've seen for that specific price action. So if I can say with a rough estimate, okay, the price action is pretty strong here, I may put it at the bottom of the gap. I may put it at mean threshold of the order block because it's not going to go there. Like the trade I took yesterday was kind of somewhat based on that, but not really. But I had a pretty aggressive stop trimming yesterday where I just kept on moving it to each point of invalidation pretty aggressively. I got in here on yesterday's trade. I reviewed that on stream. I got in here on my longs. Pretty decent entry. My stop was here. Then as it was filling the gap, the first presentation gap there, and I left this, I put my stop here. Then as it displaced up again, I put my stop at the low here. And then I placed it at the mean threshold of the propulsion block. And all those things are trades that I've probably lost on before by trimming it too tight and then I get stopped out. Then I write down, why did I get stopped out there? That's a very difficult thing to do, but it requires payment for it first, and number two, just experience of the model. And that's why you have to study the model in the beginning, how much it's pointing to those new refining areas. And then you're able to hunt it more and more to refine them down. But it always should be a point of invalidation based on the order flow, where your stop loss says, if someone were to ask you, why is your stop there? You can say, it's because this is this, this is present here. This, I think order flow is this strong, so it shouldn't come back to this. If it were to come back to this, then I'm wrong. Or it's not as strong as I thought. And that's the way you want to refine your stop loss. Will do. So should I have a separate notion where I put what the day is? Am I to see the difference? I think you should. You don't have to have a completely separate one. But if you want to just put them in the same chunk and then kind of pair the screenshots together, that's what you should do. But you should definitely have both available. It doesn't have to be grouped together or separate. It's really just up to you, whatever you think is best in that scenario. That's where your kind of learning preferences will come in. I'm a very, very, very visual learner. So I like to have mine categorized and all those things where I can just stare at them. So it'll be up to you in terms of how you learn. What are some examples of things you've done to increase your RR slightly? So, over the course of the past 4 months, maybe, or probably longer than that, number one, I've developed a new model, which I'm not going to cover here because that's just kind of a cop-out answer. I think is well, first of all, let's cover the two ways. Number one, you can extend it this way. I'm sorry, this is a short. You can minimize it this way, right? So you can tighten your stop loss, or you expand your take profit. I want to do both. If I'm trying to increase my RR, I want to both. In the words of Jared Tindler, this is your C game, this is your A game. You want to inch forward your A game and inch forward your C game. You can't extend your A game and leave this behind. You got to constantly move the inchworm forward, refine, increase. So I want to be pushing my take profit and minimizing my stop loss to be efficiently increasing my RR. Ways I've done that is using this exact stop minimizing technique I was talking about. So find the algorithmic reason for that PD array that you can push stop there, put it there. I've also tried to trade more turtle soups, which is definitely more an advanced thing to do, but I have to attribute it to some of my more better RR trades, which is just turtle souping. So more refined entry models with very refined stops. And then going to the take profit, pushing my take profits to more time-based exits, meaning not just liquidity, but focusing more on the combination of both. To me, blending both those things together has given me way better RR, where for specific times, it's allowing me to scalp the daily range. Other times, it's giving me just a better exit on the session, where I'm able to scalp, just keep pushing those TPs higher and higher and higher, where then you're able to do that. So refining the stop loss, but also I think the easiest way for most people to increase your RR, take the same trade, put your stop loss in the same spot. Don't worry about the stop loss, worry about the limits. Take partials along the way, so you're paying the trader and move your stop to break even. Now you can kind of play around with it. My logic and my mentality is, okay, if I'm getting in a trade here, and I think, okay, it's going to go to there. I think it's going to go London high. Take some off at London high, 50% if you want, maybe higher. Take it off there, stop to break even. Don't keep jamming the stop. I'm going to put my stop and break even, and now I get to play. Like I get to see what's going to go on, and if I get stopped out, whatever. I get like free, in a sense, like free capital to work with to really refine my skill. I've taken majority or some of it off, or I've paid the trader for that trade, and that is going to go in the balance. But now the rest of it is I can just say I got 3 limits left. I'm going to play with those. I'm going to see based on the speed of price, based on time of day, how far I can squeeze out of it. So like yesterday, for yesterday's trade, I took off like 50%, if not more, on the previous daily high. I thought that's where the draw was. It was a very easy draw for me. So I took like 50% off on that swing high. I got in right at 9:30 and they put me into that swing high. That was like a 2-point-something R. And then as it's then continuing up, I'm able to kind of put my stop and break even, add more positions on if I want, but then squeeze more and more limits out using different techniques. In this case, I took off some at the previous daily high. I took out some at the -4, which is another logical area. We had ERL from Thursday. This one right here, this yellow line. This ERL from Thursday was another target for me. That was my last target. But I'm able to play around with it. And then obviously we have time of day here as well, 10:30, where I can see how much can I push out of that. And then if I do that 1 or 2 times or something, then I can say, okay, instead of taking 50% off here, let me take 20 off, put my stop to break even, and I'll hold 20 or 50% to here. And now I'm lifting the weights. I'm going 5-pound weights, then 10-pound weights, then 25-pound weight. I don't have to keep going up in weight. I can just, okay, once I'm at 25% or a 25-pound weight, that average R is maybe like a 5R. You're never really going to need more than a 5R. But if you wanted to, you can keep going, or you can go the other way and now refine the stop loss, which I think refining stop loss is much harder, and you pay the price a lot early on to do that. And it's definitely a way to refine it, but I think the way is push your how far you can put your take profit first on demo, and then go to trimming your stop loss, and you just do a combination of both. Normally it's going to be like, for me, it's probably going to be like 75% take profit adjustment and then maybe 25% stop loss adjustment. That's probably a good ratio to use. Focus on how much more you can juice the healthy trades, the good winning trades, and not constrict. You still want some range. And the more you focus on trimming your stop loss, the more you get into the, oh, I need to bottom tick everything kind of thing. Or I need to have some crazy RR. Don't do that. Just get good trades and win. And you know what I'm saying? Like, bottom ticking is, you don't need to do that every time. So don't get too involved with trimming your stop loss. Otherwise you step into that perfection alley. Don't do that. I'm first of all, I want to know everything. That's kind of my personality for something that I'm getting into. And I want to be a perfectionist. I'm brown, so that's kind of the way my parents raised me, is to, you got to get A's for everything. So that's my personality. This is something that I cannot be perfect in, and I accept that. So the more you try and seek perfection in this, the more it's going to flee from you. So do not try and seek 10 R's. Do not try and seek turtle soups. Do not try and overdo it. The more you try and overdo it, the more it flees from you. Accept that you're going to be imperfect, and that's okay, because you're not here to be perfect. You're not here to be right. You're here to simply make money. It doesn't matter if you got $1 million in the bank. It doesn't matter if you took a 2R or a 3R, right? No one's going to ask you that. No one's going to say anything to you like that. And even if they do, it doesn't matter. So focus on extending the TPs, then cutting the stop loss. And then once you get anywhere to like a 3R plus, you're doing very well. Where if you know what you're doing, a 3R, you need what, like a 30% win rate to be profitable. If you're doing anything right, you should have more than a 30% win rate. So that's my take on it. What do you consider a turtle soup? Either buying the, well, maybe I'm interpreting this question wrong, but either buying the sell stops / buy stops, or entering on a very, very close change of state delivery relative to the stop runs, to me is still considered a turtle soup entry. But I'm only going to use that when it's obvious to me. Do not think that you can trade turtle soup in every condition. You can. It is very hard to do. And it goes into those kind of things of perfectionism and wanting to look good and all that stuff. It's cool. But I'm only going to soup or feel confident in souping when it makes sense to do it. I can take low day to high of day. I can take low session to high of session. I know I'm able to do that. Number one, I can't do it every day. Number two, I obviously don't need to do it every day, because what's the point? And it's not going to be available for me to take. So one of the things about experience is you learn what models to use when they're called for. The problem in the beginning is if you have too many entry models, you use all of them at any given time when they show up with having no distinction of whether it's good or bad. The only way you're able to do that is if you have studied one model for a long time, you know what that looks like. And then if you want to branch off and say, okay, this model here is going to be useful in this situation, then you use it as a turtle soup. But to me, a soup is either buying the low of that respective range or buying some sort of intra low stop sweep in the move. So there's multiple opportunities and multiple ways you can do it, but that kind of precision is not needed. Where we're in this kind of soup culture nowadays, maybe just in this Discord, but also kind of probably on Twitter. I'm not on Twitter as much, but entries are great, but at the end of the day, we're entering, right? So it's really not going to be a huge thing. If you can do it, that's great, but don't focus on too much of being flashy. And I mean that in all good faith and intent for your trading career, where it's the more good things you can focus on, the better. The less BS stuff you can focus on, that's also best. Last question real quick. Was the process of taking less trades per day easy, and how did you learn to accept taking 1 or 2 trades per week? Or maybe missing a trade for the entire week would be perfectly okay with it. I'm going to say no. It was something that was weird because, like I said, I just wanted to, you feel like you're not doing work, and you feel like, okay, if the model's there, why would I take the model every time? So it wasn't easy. I think when you are able to see how much of a difference it makes on your mental, first of all, and on your actual performance, there's like no going back. You see that the days you don't need, you just sit out, and there's a little bit of that pain of discipline where, yeah, it feels like you're missing out of a move, or you want to feel like you're contributing in some sense to your P&L on that day. So it's definitely weird, but it comes down to confidence, I think, where if you have the confidence to, if my model's there 1 time a week, I'm going to smash it. Like it's going to be out of the park. I'm going to get my entire weekly goal in that one trade. And when you look at the data, a lot of times that's true. If you were to take that 1 trade or 2 trades per week, you can easily get your goal if you hold it to your take profit, if you put your stop loss in the right position, if you use proper risk management. So the confidence in that for me, I just did it for a week in the beginning and it was kind of hard. And then once you see, okay, I don't even have to spend mental capital on a day, and now you're even more green than you were before, it just pays you in that sense. So it's hard in the beginning because you have to have faith in it. It feels like you're not doing anything, and you have to have faith in that your model is there to save you and prosper you, not to constrict you and keep you in these shackles. You made the model. No one told you to make the model. You made the model of what you think is the best way to make money out of this market. So the more that we can have faith in that, and for it to do it what it's supposed to be doing, stick to the plan no matter the mood. It gets easier to do it. And I think all you got to look at is, okay, is this model there once, twice a week, giving me what I want out of it? If you're able to shoot for 6R per week, you're doing very well. 3R per week is like the minimum I think you should be shooting for. So I'm not saying to target RR or anything, but if you make 3RR per week, that is all you need. 6RR, good. Anything above 6RR, you're doing fantastic. If you look at the numbers, that's backed by the actual numbers. Obviously, it depends on the risk you're taking, but for me, that's pretty much what it is. So it's not easy because we have to have faith in that it's going to do what it's supposed to be doing. Once you're able to develop that faith in the model and you have the confidence in that, skipping a day is easy. Like I love skipping days because for me, the discipline I get out of it is I get 30 to 60 minutes more of sleep. If I don't got anything to do in the morning, I'm gonna wake up, see if it's good. If it's not good, boom, I'm gonna go back to sleep for 30 minutes. And I'm rewarding myself in some sense of doing that rather than taking a trade. I get my dopamine then from sleeping, taking care of my body. Boom, we can get back into it tomorrow if it's there. And it's like that kind of panther mentality where I'm just sitting in the tree, and I'm probably going to be sitting in the tree till Friday. And even on Friday, I may not get a trade. That's kind of annoying. Um, but it's annoying in the sense of we basing our performance off of outcome, and not the fact that you're being patient. You couldn't be patient before. Patience is a sign of a good trader. So your patience is paying. So I get paid to sleep in. I get paid to skip a day. I get paid to not take a trade. Um, and when you frame it like that and you tell yourself that, that's the injecting logic you use. I get paid to sleep in. I get paid to skip this trade. I get paid to not take this trade. I get paid both in mental and in physical to not do something. It's not that you're limited, it's that you're actually growing yourself. So when I wake up in the day like today, I already know it's pre FOMC and I see what's going on the 15-minute chart. I have no remorse in turning my phone off, going back to bed for 30 minutes, or going about my day and not looking at the charts. Because even if there is the market's always moving. It's always moving. It's moving right now. Right. And I don't wake up in the morning and look at London session and say, oh, I could have taken that trade in London. I don't look at Asian and be like, oh, I could have taken that trade in Asian or PM. So the New York session is the same way. Just because you wake up and you show up for it doesn't mean you're going to get paid. It's one of those 9 to 5 kind of mentalities where like if we think we're getting paid off a salary or hourly. We don't. We get paid off of decisions. And we don't get paid off those decisions daily or weekly. Sometimes it's later on. So the decision for me to just skip a day, I'm not going to get paid on that day immediately. I'm not going to be red. That's for sure. So I'm not losing anything. But that way, if I take a win here, I'm still green for the week. If I take on trade on Friday, if it's there, boom, I'm either green or whatever on the week. I'll still probably be green on the week because this trade was a 5R. So if I take a trade on Friday, win or lose, still going to be green. So I think it's this is all a mental game. So as much as you can frame it on things that you encourage you more than degrade you or feel like they're constricting you, that's the best way to go about it. So your model's there to protect you. You skip days because it pays you. You wait patiently in FOMO out of FOMO because your model that's going up gives you a better RR. It's positively building. When I take this loss, I can build on it. When I fail this account, I can build on it. All that sort of stuff helps you. And the more you pout about things and degrade yourself because something didn't go right, it's you're gonna have this negative mental loop that keeps going down, keep going down, keep going down. What are you gonna do? At some point, you have to fix your psychology. And that's really the only way to do it is by developing those kind of positive affirmations when something is not going your way or something that's hard. You repeat and remind yourself this is what it is. And your brain picks up on that, and now it has enough energy to affect your behavior. And that's what you're shooting for. Of course, no problem. Pause. Yeah, so it's a whole new mental game you got to learn. It's very weird, very weird. It's completely opposite from the whole world we live in. You get paid to not do anything. You don't take trades. You can take a day off whenever you feel like and still make the same amount of money. You lose, you're still doing what you're supposed to be doing. You win, you could be not doing what you're supposed to be doing. There's absolutely no correlation to outcome and your performance. Which for majority of everyone's life That's what you've experienced. So, in a sense, you're an infant in trading, having to build a framework that is outside of all of the beliefs and experiences you've ever experienced in your lifetime. Very hard thing to do. And a lot of people don't want to do that. That's why 90% of people fail. But you have to not reshape your brain, but think differently. You have to completely reprogram a new side of your brain that has never had growth in it before. So I still want to win. Like when I play games, whether it's sports or whether it's video games or whatever, I am still going to do everything in my power to win. I love winning. I absolutely love winning. It's not so much that I love winning; it's more that I hate losing. Um, Winning to me is kind of like a relief than it is of a high. Um, so that hasn't changed, but it's more of my perspective and outlook on trading itself. That sure, I don't like losing and I like winning and trading, but that has no indication whatsoever to me of whether or not I'm doing a good job. So all of my mental effort to if I'm doing a good job or not is am I building good habits? That's it. Today, is this decision building good habits? Because if I can build good habits for long enough, it's going to be automatic. You are the man is what he thinks, and your brain is a habit building repetitive machine. So if you're able to do it for long enough and you build it into habit, trading is like riding a bike. It's what you thought it was going to be in the beginning, where you just come into the market, you take whatever you want, you make $10,000, whatever. That's what it is. But when you get to that, you have to get to that point. And that's a lot of it is just a mental framework in the beginning to trust yourself, to do what's required, and obviously believe it without seeing it. Um, Whether you're Christian or you're not, there's a verse about where Jesus is talking to his disciples, and he talks about you have believed after seeing, but blessed is the man who believes and does not see. It's a very famous passage, but in trading, it's true. A lot of the psychology is believing and then seeing, where the results that you're looking for in your trading comes only after that you believe the reality or believe that you can do something, and then you see the results. If you're constantly result oriented, you're not those results are going to be simple. They're going to be a loop. The results are always going to you're always going to get what you always got. And then you never can change your beliefs because you're always getting what you got and then you have no new data to work with. But it's when you flip the script and now you believe about yourself and about your model, about the market, before it actually gives you that, before it gives you unlimited wealth, you must believe that it has the opportunity to do that. Before you take one trade per week and it pays your entire weekly salary or your monthly salary, you have to believe that that's even possible and that you can do that. And then when you believe it and you do it, you're not going to see results immediately. It may take a month or 2 months, but then boom, now it clicks. And now what you see lines up with your beliefs, lines up with your actions, and now it's automatic. So our brain works on number one, thinking. Let's call this beliefs. Whether they're subconscious belief or conscious beliefs, it doesn't matter. Action and results, or basically outcomes. And it works in a loop. Okay. This goes to this. This goes to this. This goes back to this, right? If I say this chair that I'm sitting in can hold my weight, when I go to sit on it, I already subconsciously believe that this chair is going to hold my weight. When the chair suddenly breaks, I'm going to be surprised because that goes against my belief of what I think the chair should be doing. But I believe that the chair should hold me based on what I've seen and my experiences. And my action of sitting on the chair supports that belief. Boom, therefore it is. Perception is reality, reality is perception. But if you're able to change your beliefs and change your actions before the outcome comes, eventually it's going to blend and shape this so much that now your outcomes support the belief. And now it's a closed loop. That's what you want. You have to first, in the beginning, you have this closed loop of negative action. Negative action. It's negative here, it's negative here, and that produces a negative result. And then it's self-fulfilling. It goes back into that loop. What you have to do is, boom, you have to first break this. You can't break this without breaking this. And you can't break this without breaking this. So what's the first thing that happens? Thinking. That's the only thing you have control over in life is your mind. You can get hit by a car tomorrow. You can be paralyzed from the neck down. You're not even in control of your own body, right? If I can't tell my body tomorrow to gain muscle, nor can I tell it to not get sick. Nor can I tell it to beat, nor can I tell myself to think or to sleep or to release melatonin into my brain when it's 9 p.m. I can't do any of that. I can only control what I think. That then controls my actions. I also have some effect in controlling my actions, but they're more based on subconscious things and habit than they are of conscious action, right? You don't consciously think how to walk. You don't consciously think what hand you're going to grab the water to drink it from. It just comes from habit and from thinking originally what you're going to do. Then boom, it becomes automatic. But now, so instead of going from this negative loop, first you have to break the loop by thinking positively. You think, and then you start to follow your action. Some of your actions become positive as well. And then the thing about trading is you're going to have a random outcome because your trade is either going to be profitable or it's going to be losing. It's random. You can be doing you can have the same thinking, you have the right action. The outcome is random, but it's randomly assorted, meaning if you take 10,000 trades and you have a win rate of 80%, eventually your wins are going to be this high, your losses are going to be this high if you take 1,000 trades. So the outcomes are seemingly random, but they're really not. And we first have to think positively and kind of affirm ourselves with those actions, and boom, the outcomes will happen. And eventually, after 30 days, 90 days, whatever, these outcomes with a given sample size will now reaffirm our beliefs. And now it's self-fulfilling. And now this is where you have this easily tradable, profitable mindset that requires no extra mental capital. You simply can trade, and it's like riding a bike, because now instead of having negative thought loops that keep making you blow accounts, you have a positive thought loop that just makes you grow your capital. And the opposite is almost impossible to do, right? The unprofitable trader is almost impossibly going to be profitable. The profitable trader is almost impossibly going to be unprofitable. And this is the sort of equation that'll give you that in some sense. And obviously, if you combine this with previous psychology lectures, it probably even makes more sense. But this is the way that I think. Even in life, you have to first change your thinking before anything else changes. And you're definitely right. Well, I'm profit out. Yeah. Oh yeah. If you read that DM, yep, 100%. I think the more trust and confidence you have in yourself and your model, the easier it gets. 100%. I think it's a misconception that psychology is everything. I think psychology is, in some sense, very important, 80% of your trading, but 50% of psychology itself comes from the charts, comes from experience of trading. So if you don't have a good model, of course you're not going to have good psychology. If you don't have a good bias method, your psychology is going to be crap too. You have no confidence. So you have to find a model, diligently study it. That builds confidence. And then now you're able to fix some of the underlying psychology mistakes like over trading or whatever it may be. I'm glad, Dean. That's good. I'm glad this is helping. This is all recorded and it'll be posted later too. Yo, G2 questions. Do you trade GCSI or CLRB? I'm not gonna lie, I don't know what either one of those are. Oh, no. Well, the only thing I trade is NQ. I used to trade oil. Haven't traded it in probably a year or two, but only thing I personally trade is NASDAQ. That's it. Even if there's whatever, I'm not trading ES or YM. I'm not trading anything besides NQ. What do you do when one of the assets is decorrelated? Example, indices trade. No, I used to wait for correlation. Now I don't. I'm able to pick up whether or not the session is clean enough for me to trade without getting that coupling. If two of them are coupled and one of them is decoupled, I don't worry about it. If all of them are decoupled, then that brings some attention. It's going to add a chip on the other side of the scale, right? And that's a good analogy because when you get something that's against your bias or against your perception of the charts, it's not gold. It's not going to go on the other side and weigh the entire thing down. It's just one fleck on that side. So as much as we can remember that, so I will incorporate it and I'll think about it. It's not going to make me flip my bias by itself, but it's just another chip on the other side where if I got doubt and data on the other side and it weighs more now, I'm flipping. Yeah, I watch the triad mostly for SMT, order flow, as well as the cross correlation. Early in my career, I used to watch these three and then combine it with DXY, which I do occasionally still look at, but I've learned from my own personal seeing that using the coupling of the averages as well as the inverse correlation with DXY is almost a time waster for me because if I'm watching it during the session, it's giving me data that's not going to be as important for me to flip bias as simply watching the NASDAQ chart and seeing what's going on there. I'm most comfortable. I've had the most data with NASDAQ. So if I were to flip bias or get any sort of data that's going to make me take a trade, it's not going to be on any other chart besides the one I'm trading. Simple as that. So I've strayed away from spending more time on those coupling of averages and DXY and simply just spend more time in what's going on here. That's my personal approach, of course. But that's based off of doing it, testing it, and then saying, yeah, I don't need it. Hopefully that helps. Got any more questions? Put them up in the chat if you do. Otherwise, we'll wrap this up. All right. So we'll keep this one there. It's about an hour and 15 minutes. I know. Ain't nobody watching this back. Oh, one more. Okay. No problem. I'm just joking. I know. I got some hardcore people that study. No, I use SMT. I use SMT all the time. I literally got a 3 SMT chart up here. So SMT is one of the only things I look for cross correlation between. But I don't use correlation as much. Where if YM is doing something opposite, it's not going to make me go, oh, I got to wait. Yep, this is going to be recorded. Yep, the entire thing, front to back. But it's one of those things, man. Trading is one of those things where you have to, if you really, my take is if you really want it to work, you have to become obsessed in some way. Doesn't mean you're spending 8 hours on the charts, but every aspect of trading requires a whole entire mindset shift in some sense. Not rewiring, not I mean, I guess it is a rewiring, but you have to be obsessed. So if you're not doing certain things, it's going to take longer. Rather, if you just spend, a certain amount of time doing what you need to be doing, it'll become automatic. It becomes automatic, but that requires a high level of focus. And good focus on process orientation. That's the only, I keep stressing it, but that is the only thing that is concrete in this. The only thing that's concrete that you can go to sleep at night and say, did I do a good job trading today? Is if you followed your process. And you're gonna win. It's like the Trump meme. You're gonna have so much winning. You're gonna say, Flux, please, we can't take this much winning. It's gonna be like you're gonna eventually you're gonna be doing. If anyone's seen that clip, it's a good impression. But you're gonna keep doing it. And then it's like trading is easy because you win every day. Don't you want that? Don't you want to win every day? Don't you want to not have any self-doubt and have high confidence? You want to win every single day. It's only when you do what you need to be doing. Then you can say, I won the day, right? And you go and you can go to sleep and you're like, yeah, I earned my sleep today. So and a major thing, at least for me, is not focusing on the future, not focusing on the past, but as much as you can train your brain to just focus on about what 16 hours you may have awake. That is all that matters. You don't need a streak. You don't need to say, yeah, I followed my rules for 15 days so far. Don't do that. The more you make it a streak thing, the more you're going to fail. You just become more and more in love with proving to yourself that you can do it. That it's not some magic sauce that I have that you don't. It's not some magic thing that ICT or any profitable trader has that you don't. It's simply just proving to yourself that all it takes is some discipline and some focus. Because and this is why, I mean, if you I can go into the whole conspiracy thing of it, but like everything nowadays is just programmed to make sheep of society. Everyone's the same, right? And it's they kill your focus. They kill who do you fear the most, right? If you were to come up against an opponent or come up against anyone of seemingly scary talent, it is people who are hyper focused. The Navy SEAL, whose their only job is to kill you, right? John Wick. People who are dedicated to one thing until it's finished, then they can rest. Then you can, if you want to scroll, you can scroll. But to be honest, you won't even have time to scroll because you're too busy living your life. So you have to become a person of sheer focus and sheer will in combination with discipline despite how you feel. Following the plan despite your mood, because the plan is in your best interest. Every day you deviate from the plan, the longer it's going to take. And you hear this all the time, but it's really only when you're bored and you sit by yourself and you really look at yourself, it's uncomfortable. Do you see the most growth? Like I just went on this trip recently and I love it because I have no data. Like number one, you don't have time to be on your phone. But number two, I literally had no data out there sometimes. I only had Wi-Fi at my Airbnb. So you're forced, in a sense, to think. You're forced to be bored, and you're sitting there with your thoughts. And your brain is able to sort things out. It's able to think clearly about things, and that's where a lot of stuff can go on. So become a habit building machine from the time you wake up to the time you go to sleep. You got things you do every day that's reinforcing your character and identity to the point where it's auto producing the results that you want. So when I wake up, I have something I read. It's a mantra. It's a daily reminder. When I go to sleep, it's that same exact mantra and reminder. During the day, I've got plenty of things I have to do. I got to go to the gym or work out in some sense. I have to visualize. I have to, right before I go to sleep, I'll stretch. I'll have to read a book. I'll do these tiny things that are giving me wins throughout the day, where even if my day's bad, even if my day's good, at the end of the day, I said that I did everything I was supposed to be doing for today. Boom, I'm stacking up my percentages. I'm gaining experience on the day. Stack that up over 3 days. I'm better. I'm good. Stack that over 2 weeks. You're toast. Stack that up over, what's that one meme? So I'm if you're older in this chat, you probably got no idea what I'm talking about. Stacked it up over 3 years. You're bread. Somewhat off topic, brother, but thank you so much for all the streams, of course. It should be, yeah. El Zorro just texted it, but it's posted there on the YouTube links. A lot of these live streams, I don't put them up on YouTube publicly. I don't really care about subscribers or anything, so for those who want to see it, they can find it. But yeah, all of my live streams are normally posted in YouTube vids. And if you don't want to go to Discord and open it, you can go to my YouTube channel and you can go to the playlist. And then underneath the playlist, there will be a live stream recordings link. And you can see all those there as well. The only ones that'll exclude is private streams. So one's the private group and one for the PDF. Those will be truly unlisted where you can't access those at all unless you have the designated link. So enough psychology. Yep. Well, I don't want to take too much more of your time. I know it's been going for about an hour and a half here. So I appreciate you guys sticking around. Going to tomorrow, what I'm expecting is a Wednesday low of the week, if we can get it. We have these relative equal lows down here. And to me, this looks almost like a double Judas swing, but I would very, very like if we leave all this liquidity going into Thursday, Friday. My higher time frame bias, like I said, is the all-time highs up here. All-time highs is somewhere up here. So weekly draw wise, that'd be over there. FOMC is our first news driver for the week. So if we can come down here, take out these lows or form an SMT in some sense below these lows, and we've got all of this low resistance up here. I'm looking for consolidation, drop down on Wednesday, take the low out, and then expand Thursday, Friday into the buy side here and into the buy side up here at the all-time highs. So tomorrow, pre-FOMC, normally pretty hard conditions to trade. You're going to get either a swing to Z or seek and destroy. Typically is the profile. You very rarely will ever get a classic London protraction. Basically, price action is going to be wonky. Thursday is a bank holiday. Boom. You don't trade bank concepts on a bank holiday. Skipping that day 100%. Friday, like I said, if we are able to get this midweek reversal profile, Thursday should be a continuation. Friday should also be a continuation, at least until London close on Friday. So if I can get a very late continuation trade on Friday in relation to the weekly range, that'd be best. If I cannot, and it's stuck within a range-bound trading day, I'll look for a scalp. I'm pretty confident I'll get a trade on Friday. I'm not giving that as an expectation, but rather something that I think is very likely to happen. Just given the news profile and the weekly price action we've been getting, I'm pretty confident we'll have a move on Friday. But for tomorrow, 90% is going to be, sit out. There's going to be a 10% chance that I choose to trade tomorrow. And it'll most likely just be a scalp either right at 9:30 or right at 9:50. One of those two times. I'm not going to wait for last ditch. I'm not going to wait for PM, whatever. 9:30 and 9:50 tomorrow. If that is going to be a scalp towards what I think the draw is going to be, low hanging fruit, get in, get out, be done. Win, lose, that's what it's going to be. So there's your gem for tomorrow if you want some kind of plan going into it. But I would suggest most likely it's going to be a skip day. So sleep in if you want to. You're not going to miss anything, even if you choose not to trade it. It's not going to be anything super important, but you can see between all the averages, we have all of this low resistance here, right? Relative equal highs, whatever you want to call it, on both ES, NASDAQ, and YM, all that. So the fact that we're generating a lot of this liquidity here, and even the fact that today as well, right? Today did not continue that range and trade up to here. It's leaving both of that. That's important. It's failing to do something. So trading back to the range, tagging the weekly open, kind of setting up for what I think to be kind of a good either a drop down here and takes out this liquidity pool for Wednesday, or we'll have to see. But I would not be surprised if like an Asian session move here happens where it goes to take out this low and then they're reversing back up to taking the highs. And if it doesn't do that, I'm very flexible. I think sometimes we get too much attached with being right or wrong, when in reality, I don't care if I'm right or wrong on my pre-market, my whatever. If it lets me flip my bias, I'm flipping my bias. I don't really care about being right or wrong. Give me my money. You know what I'm saying? So, of course, yeah. I'm glad I get to be some effort in building people's psychology and their model and things like that. But I know the space, since I've been in the space, and obviously now it's been flooded with stupid advice and people who have no idea what they're talking about in terms of charts. I like to think I have some experience in the charts. Um, thank, thankfully to ICT and to my God who's given me wisdom. But I obviously would probably disagree with some people's trading and the way that they look at it, and that's just from my own experience. So I'm glad that I'm able to have some effect in everyone's trading, and if I've had any way of um, even building a model. I don't care about payouts and stuff like that, but if I'm able to help you build a model and you've had some sort of aha moment that's unlocked something for you, that to me is worth teaching. Because to me, that's all that's all I was looking for as a student, as those individual aha moments. How one sentence is said, unlocks a whole new way of thinking. So as much as I can try and stimulate that for you, that's my goal, is to just give little bits of snippets of information that are gem packed. A lot of times I'll say it and it might go over your head, but when you go back in and watch it later, it's like it may be 2 months from now, but you pick it up. Um, I personally think that there's no live streams or lectures other than ICTs himself that has this much gems and data packed individual stuff where every sentence I say normally in market reviews have some sort of important meaning in terms of my own decision making and bias that would help previous me. I think that's what I think. I when I got into that's what I tried to do. Is if I had to teach myself, I would want the most amount of non-fluff gem-packed videos to watch and absorb, so I could be at my best. So like I said, I'll wrap this one up here. I'll put this up on YouTube. Hopefully by tonight, if it does not take 4 hours to render. If it does, then it'll be up tomorrow. And then tomorrow, if they're for the private group guys, I may stream, I may not. It'll be based on the price action, like I said. But I'm not going to do a market review tomorrow. It's going to be FOMC news, so most of anything, the price action is going to be moving in the PM session. I don't review PM sessions all that often, so no stream for me tomorrow. Same thing on Thursday, no stream as it's bank holiday. Friday, most 100%, as long as I wake up in the morning. We'll have a price action trade on Friday, Lord willing. Hopefully a demo trade on there as well on the streams. If you want to join the streams, feel free to hop in the private group. Pick up the PDF if you want. Plenty of good stuff on there. You can ask anyone who's got the PDF. I'm sure that they'll vouch for it. But anyways, before I leave you, obviously do the things that are necessary to succeed. And I will talk to you guys very, very soon. All right? So take care tonight. And peace.